Good morning, trading world. It is April 10th, 2023, 8:12 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. We have had a day in which the futures market was open for a period when the broader market wasn't. There's going to be a gap in order flow which causes the irrational behavior of the market where it ignores small time frame indicators. However, at the same time, we are coming into a consolidation after an expansion period where the range usually shrinks and or falls after such expansion. But with the larger time frame like the weekly in control, it's hard for me to imagine a quiet inside day when the weekly is in control. I'm used to these quiet inside days after these periods of expansion, and it's likely that we get a day like that, but for me, it just won't seem that way because of the large range on the weekly. So even for a quiet inside day on the weekly, just to me, it just won't seem so quiet due to the size of the range. Now, let's team that with the fact that one of the most awaited reports, the job number, happened when the broader market was closed. So it's, again, hard for me to imagine a quiet inside day as the market seems to want to come out of its wonderland or bizarro world where bad news is seen as good and good news is seen as bad. We wait to see how the broader market is going to take the news. Another key thing to pay attention to is the tech sector, as a lot of people listen to the talking heads on TV as a safe place to hide money right now. I saw it as an opportunity to short at the end of last week. Tech is a leader in the market right now, but I think it is overdone and it will be a leader to the downside soon as the overall market weakens. Now, the weekly outlooks are as follows. The SPY has a bear bias for the week, closing below 409.19 with a possible retracement of around 408 area. There is harmony between the technical side, which is bearish, and the quant side, which is also bearish. The S&P futures has a bearish bias for the week, closing below 41.5 with a possible retracement of around 41.32. There is harmony between the technical side, which is bearish, and the quant side, which is also bearish. That brings us to the key levels to watch for the day. Let's get those up. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our Jack resistance at 409 to the 410 area, Queen resistance 411 to the 412 area, and then King resistance 413 to the 415 area. On the support side, we have our Jack support at 408 to the 407 area, Queen support 406 to the 405 area, and then King support way down here 401 to the 399 area. I do expect some support here at some point, possibly around this maybe 402 area, to see the reversal, and let's kind of pick back up whether it happens today or going into tomorrow, for us to pick back up and come back to highs of pre-market and Thursday session. that brings us to the thesis for today. The main thesis for the day is bearish, closing below the 409.19 with a projected target low of between 409 and 404. The alternate thesis is bullish, closing above 409.19 with a projected target high of between 14 and 415. The main channel we're in is 397 up to 416. The main channel below that is 397 down to 379, and we should also be aware of the main channel above at 416 up to 425. Last week, market strengthened breadth open gap up and was range bound for the day, reaching its highest range around noon. I expect strength to open where it left off, maybe weaker. Maybe weaker coming into the morning and then weakening as the day goes on to a point, but I still expect this to be pretty much range bound, just a large range. We have harmony between the technical side, which is bearish, and the quant side, which is bearish. The futures have a bearish bias for the day as well, with harmony between the technical side, which is bearish, and the quant side, which is also bearish. That brings us into the scenarios of the day. All right, here we are back with the scenarios of the day. There's, excuse me, pretty much a toss-up between the first two scenarios. I'm going to start with the expanded range day structure. In the expanded range day structure, we could begin the day in the middle of a consolidation and rejection of resistance. We could have a rather large chop zone for the day. We start off after rejection of a resistance level at that 409 area and pretty much falling to find resistance somewhere between 407 and 405, and consolidating and trying to pick back up to get back to where we started the morning or the overnight session. So that is our expanded range day structure. All right, our second scenario is going to be our trend day down day type structure, meaning we could open gap down and start with a pushback toward the previous close, represented by the black line here on the screen. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king support area. And normally the second part of the trading day usually starts with looking to continue the primary trend of the morning, which would be down, but at some point turns into a head fake, in which we usually see some type of rally going into or near the close. So that is our trend day down day type structure. All right, our last scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area, find midday chop around either the queen or king support before going back up with the same energy or force we went down with the first part of the day. And as we continue on into the morning, the case for this gets even stronger between this and the expanded range day type structure, because there is some support here down around that 405 area that could have us see a decent reversal off of. So again, be very careful. Right now we're in that area where we're trying to figure out the new trend direction on the weekly time frame, and it causes a lot of chop. And a lot of people get ate up right here. It's not that they don't have the direction correct, but it's the time and being able to withstand all the chop back and forth. So again, be very careful. And as I always say, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on and managing that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.